Thank you all for being here today. So I'd just like to start the conversation off by asking each of you, as software providers, from your perspective, how do you see the future of platforms? Perhaps we'll start with you, Michael.
I'd suggest that platforms have got a long lifespan still, to the extent whereby if you look at our activities across all the territories that we operate in, last week one of our clients, a banking group in Malaysia, in fact launched a new wrap that is completely based on our solution. So we're very positive about wraps continuing to be very relevant to a place, a segment of the market across a number of territories.
Our general view is that the role of platforms will tend to follow the way financial planners deal with scaled and scoped advice, or even direct advice. And so while I'd see planners working in that area, actually strengthening their use of platforms, and that's in that sort of sub 250k kind of client base. The ones that move more distinctly into the high net worth space, I think will probably tend to move away from platforms, and we'll start to use financial planning platforms as the basis for administration.
I think the value proposition that platforms are offering will hold a lot of water for a long time. You can put your insurances through there, you can roll your UK pensions over, you can start pensions. It's an administration and reporting service. And most of the software providers, as we stand now, are looking to integrate with those platforms, not necessarily compete with them. So my gut feel is we've got a long shelf life for platforms, and the idea going forward will be through opening up APIs, we'll be able to better integrate with a whole range of software providers, not just the Coin XPLANs and Midwinters of the world, but a whole lot of other, and if you were to use an analogy, look at the accounting space, where you've seen MYOB their marketplace be disrupted completely by Xero. And if you attended the XeroCon conference recently, they integrate, or they had over 400 different software providers which integrate into their accounting software. And at their conference, they had 83 of those actually provide a stand and integrate with the accountants that attended. So they are producing an ecosystem around software, and I think the platforms, as a challenge, need to adopt the same kind of approach.
I'd love it if each of you could tell us a bit about the current innovations in software development that you think are going to impact financial planners and planning software over the coming years. Mike?
From our perspective, the major areas we're looking at, we certainly think that big data is going to have a fundamental effect on the way financial planners run their businesses going forward. So access to all sorts of forms of big data is going to lead to changing the way and the cost of administrating financial planning businesses and the way they market and sell in the future. And leading around that, and it sort of goes to the comment that Peter made earlier, is data connectivity is absolutely vital. For people that have been rolling around the industry as long as I have, we've sort of spent the first 20 years, I guess, trying to lock everybody's data up. And the reality is the average consumer now believes data is theirs and not ours, and they want access to it, and they want to be able to push it and pull it at will wherever they want to. So our systems have to develop, they have to open up, and we have to give them that capability.
It's a good point about data. It seems that we're hearing that word disruption and metadata affecting the way that software providers sort of put their stuff together. I mean, you look at Coles and Woolies and the way they're using all of our shopping data and things like that to produce financial services and put things together. So do you want to make some comments about metadata and how that's going to affect your business? Perhaps Peter?
The key to this is security, and we've recently seen the Hollywood outbreak of pictures being distributed and hacked and etc. And the key here really is ensuring that whatever systems you're using, you've got the best possible security and the best data intrusion surveillance available. Now, if we all sit in our own little pockets and have our own little IT teams, we will be heavily exposed. I would suspect that by using best of breed, Amazon Web Server and their IT expertise, you've only actually got one source of problem, and that is their web servers. Whereas if you're in a system whereby everybody has their own server, and there is a data intrusion issue or a security issue, you have to go to every one of those servers and sort of work your way through with your own little team. So I genuinely believe that using the very best that's available out there and the sort of, I guess, the robustness of their IT teams, that security of data will be greatly enhanced.
Certainly the element of physical security around a data centre and how that data centre operates is very important, but the thing that advisors need to remember is that the single point of weakest entry into their data is the front end, and there needs to be a greater focus on the security around that. So saying that I've got XYZ as my data centre is pointless if the front end is as weak as a straw door or a TP. Sorry, Wayne, I've just noticed your badge, it says XPLAN IRESS. I've got to welcome you to the business. In terms of big data, I think there's a broader umbrella that covers all of this, and that's what Rubik was talking about in his presentation, which is client engagement. Advisors today have got a hell of a lot of clients' information. They probably don't recognise how much information they do have. The real challenge for them is client engagement. So one of the things that we're working with our client base on is making them understand just how much functionality they've got sitting in their hands at the moment in terms of how they can enhance that whole client engagement piece. Now, the challenge for our industry and the profession for the last, let's go back covering 3-4 years, has been that the legislative change and disruption that has been set upon us, and you as platform providers have well and truly been caught up in that riptide, is that our attention has moved completely away from what the client need is, and it's been all about how do I introduce fee disclosure statements, how do I deal with opt-in, all these elements, and everyone's attention and focus was so clearly addressing these issues that the key thing that we now need to catch up on is all that capability that we've introduced into our suites over the last number of years to allow advisors to better engage with their client base, whether it's a prospective client or an existing client. I think that's, in terms of trends, in terms of focus, that is certainly now what we're starting to see emerging, where advisors are finally getting their head out of the deep water that the regulators have thrust upon them, and they're getting an opportunity to finally gain some sense of what they can do with engagement using things like big data, using things like all the integration work that we've been doing over the last 10 years to get solutions to where they are today.
I'd like to get your ideas about what are some of the most effective mechanisms from a software provider's perspective of getting traction in the advice market and ultimately getting distribution. Now, as we've just found out, XPLAN is pretty dominant. In fact, they seem to be taking over Wayne's business. So I might let you off the hook here, Michael, but what are you doing to stay where you are, perhaps?
I think this is relevant to platforms as well, and as much as I love RECEP and the research that Investment Trends puts out, the one danger of listening to a client is the old Henry Ford quote of, if I did what the client asked me to do it, I'd have faster, we'd build faster horses. And that's, I think, key to what we're doing as a provider is, whilst we have to be vigilant about listening to what our clients are asking for, we also need to tiptoe around that very delicate topic of this is what you want versus what you need. So we've certainly spent a lot of time ensuring that we can help clients form their strategies and get them into the right space. And probably the other thing that has been key to seeing our business get to the position that it's in is understanding how some of these trends are evolving over time. So a classic example is over the last few months I've noticed there's been a hell of a lot of conversation around the convergence between mortgage brokers and advisors, and the fact that the debate is mortgage broking really just a subset of the financial advice operation? Mortgage brokers need to have financial advising capabilities, yada, yada, yada. At the end of the day, if I look at what we did some 6 years ago, was that we introduced mortgage research into the tool set. So it's been there for a number of years. We've been evolving the way that integrates and the way that it integrates back to the institutions from a perspective of straight-through processing, all those sorts of things.
Wayne, what's Coin doing to get that distribution in the advice market?
A point that I'd like to make at this sort of juncture is that one of the things we really think that's going to change about the way advisors use IT is that traditionally, when you think about it, IT has largely been disseminated by large institutions or companies like ourselves, and there's been a sort of dependence on a big provider to get software out into the system. And at the moment, we're sort of hearing a lot of paranoia about things like robo-advice and what impact it'll have on advisors. But what I think you'll find is going to be quite different is that technology is actually more accessible now to small businesses than it ever has been before. And you don't need to be a $1 million or $2 million or $10 million company to actually have access to just about state-of-the-art IT. And I think we'll start to see advice practices becoming far more IT savvy and using even things like robo-advice at a practice level rather than provided by a large brand to change the way in which they actually engage in the advice process. So they'll use more technology, they'll use it much differently to the way they are today, and they'll become far more dependent on it.
From a distribution point of view and the opportunities that we're seeing, I think the mortgage brokers are one large area, and they are very much coming into the marketplace on a scaled advice type approach. So one of the things that we're making sure is available to these guys is that they can do both very simple, quick, efficient advice, scaled, right through to the most complex type of strategies. And we're going to be working with Grant Abbott's group to enhance our self-managed super fund area, which sort of flies in the face of the platform space, I guess. But it's more that we're seeing this client engagement coming through. So the mortgage brokers want to engage the clients. The industry funds want to engage their clients. And there's even the platforms, we're seeing a lot of disengaged clients that need to be brought in closer. So things like the ability to self-generate an SOA and using software to triage clients so that they can go into a mobile application, maybe run a couple of calculations, do some disturbance work for themselves, and then decide that all I really need to do is something very simple: tweak my contribution level, up my insurances, etc. And this can be done by the client under a triage system. Now, if the client decides, well, I actually need a little bit of client involvement here, then I can move to the second level of triage, which is the advisor gets involved, or I can actually go and do a face-to-face. So I could then, triage myself right up to that level. So we're trying to build systems or opportunity sets which exist within the software to handle all three levels that a disengaged client may require.
Just an interesting comment on robo-advice, purely because I think the term has largely come out of the states where it is a growing trend. But if you look at what they're talking about over there, they are essentially investment style platforms that are doing self-analysis of a client's portfolio and essentially doing a quick link between this is your risk profile, therefore this is the sort of portfolio that you need to have. Now that is reasonable, but in terms of sometimes a client being expected to understand how to for example, purchase insurance, there's a lot of terminology, there's a lot of complications in terms of when a claim is now deemed to be made, that it makes it very relevant that an advisor always needs to be involved in that exercise. And I think the challenge for advisors is making sure that they can communicate out to their prospective and existing client base about the value of what advice brings to the table. So whilst we see robo-advice certainly being something that is being used at the moment, continuing to be used amongst our client base, and the fact that there are certain different elements of how our individual clients want to add their IP into the solution, and how that solution needs to be developed will again vary from client to client. To a large extent, there will always be that piece of the advice process where a human needs to be involved, and we can't undervalue what advisors do in that space.
The reality we're faced with, and that you're faced with as platform providers, is that 3 out of 4 people that should be using our products don't. It's really that simple. And I'm sure Rashid will correct me if he's still here, but I don't think that's moved much in the last decade. So we actually see technology as a way in which predominantly Gen Y and Gen X are going to start to enter this market and self-advise. And absolutely, it won't be pure robo-advice. That will be the entry space. Maybe 1 in 10 people will self-advise and get to the end. 2 out of 10 will end up on a telephone call somewhere to actually finish the execution of the outcome, and a percentage will end up talking to an advisor face-to-face. But as a funnel and a way of starting to engage, and we've been talking about engagement of consumers in general, absolutely we see it as a powerful model going forward.
This panel's titled The Software Threat, and as a journalist I love words like that, threat. They really get me excited. So to what extent do you see financial planning software posing a direct threat to platforms? We've covered this a little bit already.
I think it's easy to throw the word threat around. I think at the end of the day, what we're looking for here is complementarity, so that the systems which are developed by, we'll call ourselves the software providers, are integrated into the actual platform back office. That's going to be a challenge because the software providers are moving very much towards the cloud, open APIs, etc. And unfortunately, my experience is that the platforms are often stuck on relatively old technology. And so that's going to be a challenge for the platform industry to bring themselves up to speed, open up those APIs, allow that sort of integration of data to be a two-way street. At the moment, it's predominantly the platform's data feeding information to us, with little going back the other way. I think that's going to be, if it's not a threat, I think it's an opportunity, and I think it's a challenge that over the next 2 to 3 years everybody will have to face.
I think the biggest threat to platforms is pretty obvious. So let me give you a basic piece of maths. Depending upon the platform that clients might have their assets administered by, they're probably paying somewhere between 30 and 90 basis points for that joy. If they stuck that $100 million on IRESS or XPLAN, they're probably paying a flat fee of somewhere between $3,000 and $5,000 for the lot. That's the reality of the threat of a platform like a software platform competing with a wrap account. Wrap accounts make their money out of margin. We make our money out of license fees, and that's what's going to compete with one another. Now, you can't take away all the things that a platform does. As a tax engine, as a reporting engine, as an administration engine, as an execution engine, none of those needs will go away. And that's why I feel at one end of the spectrum, it will constantly remain the simplest and easiest thing to do will be to use a platform. But as you go out into larger areas of money where the financial plans are actually trying to keep and maximise the margin to themselves as opposed to either us as software providers or a platform as administration engine, well, that's why I think use of other IT alternatives will be the threat. And there's definitely been a trend post-GFC in that space in some areas.
I only this week had a conversation with a business that was having this very discussion around platform, on platform, off platform, and the reality of it is to a large extent is it's a mindset, it's a cultural shift that needs to take place. Their view was, yes, I understand, we've done the numbers that Wayne's just presented, we've done those numbers, but at the end of the day, I come to the office at 10 o'clock and I leave at 4:30 and I don't have any stresses. I understand that I could take an element of the margin and pocket it myself if I offered those administration services in-house. But do I want that headache? There is certainly, and this goes with the panel discussion this morning earlier that I was going to pull Claire up on it, but it's neither here or there. Certainly, the types of conversations that you have will be largely driven by the focus that the groups that you're dealing with will have. So certainly Claire would be talking to people that are thinking about moving out into getting their own licences. So naturally her discussion is concentrated around people that are thinking that way. There is a large, broad piece of the market that just sits where it is and is happy doing the way things that they've always done, not happy about legislation changing and all those sorts of things. They just want it status quo. And from a platform perspective, yes, you'll always have those that question, is this the best mechanism? Is this the best way of outsourcing this role? And some may take the decision to bring it in-house. Just even if you go to high net worth style businesses, they still will sometimes take the obvious choice of saying there is a platform over there, we'll white label it, we'll use it in exactly the same fashion that we might have used one of the traditional big wraps, and they are happy to outsource. So it doesn't come down to necessarily it being a software threat. I think it is, as I said, it's a mindset change. And if the platforms continue to offer value around how they provide their services, how good you are. You saw on the chart up there that Risa presented, administration is the number one feature being sought. You get your admin right, because the conversations, again, that you typically have with an advisor is, at the end of the day, if something goes wrong, the client's going to bag me out. They're not going to phone you up and give you grief about what you've done wrong on an administration front. I will deal with that. So the less headaches you give me, the happier I'll be. Do that at the right price and I'll stick by you.
Perhaps the threat to platforms might be M-Fund, the ASX's settlement system. This is something you've suggested to me before, Peter. What's the thinking behind that?
There's been a lot of talk about this and whether or not a transaction functionality that M-Fund provides will ultimately threaten platforms. I somehow doubt that unless they are able to incorporate a lot more sort of administration, accounting, tax, etc. I don't believe that they're going to be a threat. I believe the threat, if there is one, would come from vertical integration and the reliance on owning distribution. And I believe, I didn't see John Hewson this morning, but I believe he's made some comments in that regard. And so I would think if there is any form of regulation or legislation around defining what is independence, that could see a reaction from the advice community to move away from what we might call the big end of town, and that might have an impact on the flows that go to certain platforms.
Another topic that we've already touched on is this idea of convergence. Financial planners getting together with mortgage brokers and accountants and working together. Peter, you gave the example of the accountants and Xero. How is your software evolving to reflect this, and what do you think platforms need to do to keep up with this trend?
We really see this as an obvious area of change, and perhaps the way we would look at it is it's just any form of financial advice that is intermediated sort of lends itself to converging into a single database delivery of software. So our most recent purchases, as most of you would have seen, are two mortgage broking capabilities, which are now partially and will be fully integrated into Coin. And we see other opportunities in that space in both insurance and accounting.
It's something that has been ongoing for a number of years. The discussion prior to mortgage brokers was accountants and the convergence between what accountants do and what advisors do and how the two need to coexist. There's been this supposed war that has raged between the two groups. Reality is that we see many businesses that do a fantastic job of either having an in-house accountant or the reverse being where they're an accounting business with an in-house financial planner. I think the same is the case for mortgage broking, and somewhere down the track things like estate planning may evolve into those businesses having an umbrella style operation. that supports exactly what clients are chasing. I'll probably take a different view in terms of comments made around advice typically having been complete, holistic, and scaled advice being something that's relatively new. I think scaled advice has been around for a long time, it's just that it didn't have that name. So clients have more often than not received advice around subsets of an overall need. So again, that's a concept. It's a challenge that our clients have been presented with for a number of years, and helping them get through how they actually provide effective solutions around it. That is part of what we need to do.
You mentioned scaled advice, so there was some investment trends research earlier this year on software providers, and they found that one thing that advisors really want you guys to provide them with is some real solutions around scaled advice and complex advice. So do you want to go into that in a bit of detail, perhaps, Wayne?
One of the first things we found when we bought Coin, which was just over 2 years ago, was that was the general market demand from most of the institutions that would be represented at the tables here today. And that was the first thing we went out and did. We actually bought what we believed at the time, and still do believe, is the most up-to-date scaled and scoped device capability. I think what we are discovering, though, is, and I agree entirely that I think scaled and scoped device has been given in some form or other for years, but this concept of people moving purely to providing advice in that nature is moving more slowly than we would otherwise expect. I still think it will happen. I still think people will ultimately end up using probably 4 out of 5 forms of advice will be scaled or scoped, but whether we get there in the 5 years that was originally anticipated, or whether it's 7 or 8, it might just move a bit slower than everyone thought.
You would expect that in that scaled advice, where we're really just doing some tweaking to an existing strategy, there should be room for the platforms to provide those types of implementation mechanisms, alongside the existing software providers. It's not a hell of a lot of work or a challenge there to simply say, look, all I want to do is tweak my contribution level or my insurance level. I would have thought that would be relatively simple. The platforms don't seem to have done it very well, so it remains in our space, but I would say it's a challenge for you.
Turning to the FOFA amendments, which has been an ongoing saga for at least 4 years, and I can tell you I'm pretty sick of writing that particular acronym. How challenging has it been for you guys to keep your software up to date with the ever-changing requirements of these reforms?
FOFA for us has to a large extent, in terms of what development requirements have needed to be implemented, has been a bit of a non-event. A lot of the functionality that was required to deliver what was required under FOFA was already there. It was already inherent in the solution. So my challenge to my clients has always been, are you able to do it in such a way that you actually don't need to press a button? Now, there's a lot of businesses that haven't reached that goal simply because the way in which they've approached their business model needs to be refined. So I think the bigger headache has been not so much the software development side, has been helping our clients understand how they can better run their businesses. And this goes back to what Rubik again was talking about, efficiency. It's all about how we are able to assist, to consult with clients, to getting them to a point where they understand exactly what's sitting underneath that hood in terms of capability and how to really exploit it. It's those businesses that take those reins and run with it that tend to be extremely successful in a whole range of opportunities. And FOFA presents, at the end of the day, no real challenge to them either. They've brushed it off and moved on, and they've been very quiet about it because they've been focused on other elements.
Most of you would know our footprint is predominantly institutional in the first instance, and only about 10% in the true IFA space. And so we discovered that our major clients all wanted a bespoke solution relative to either their AFSL compliance regimes or their historical footprint or their historical legacy systems. So we don't sort of have one solution running around. We've probably got about a dozen at the moment. And it's fair to say that our experience with our clients has been that none of them are completely happy with where they've ended up, and it's a sort of area of ongoing refinement. They're very happy about not having to do opt-in, of course, but
Yeah,
they're not there yet in terms of really executing well on FOFA.
The challenge that we saw was in the commission system area, where you're trying to produce fee disclosure statements. There was inconsistency of quality. We're agnostic as far as which commission system can be utilised. We can suck anything up, but it was the quality of the data that was the biggest challenge for the advisors. They trying to read line items in these commission statements and making sense of it so that you can present that to a client and the client can understand as well as you can, does genuinely present some challenges. So in our software, what we decided to do was to give advisors a simple mechanism to clean up that data so that they could simply understand what each line item was and then which of those need to go into the fee disclosure statement, and then we automate the process from there. But was it a big build for us? It wasn't particularly a big build. It was more a challenge for the advisors to get their head around what was in scope and what was out of scope.
Michael, something we were chatting about earlier today was the fact that most advisors are very reluctant to move from one platform to another. There's a certain amount of stasis there. It's a big hassle for them to get up and move over from one to the other. Even if platform B is much cheaper than platform A, they're still quite reluctant to do it. How is that affecting your business, I guess?
It doesn't affect our business so much as, to some extent, it provides an opportunity, being able to provide data feeds from so many platforms across the territories in which we operate makes it a definitive advantage to be able to say, yes, we receive a feed from that group. But what it does highlight is that from a platform perspective, again, you are in a very privileged position because you are almost at a point where you can be kicking sand in their face before they react to the treatment that they receive. Not trying to put that term too lightly, but it does highlight that in many instances, most businesses will probably stick with where they are for the challenge of having to move off the effort involved in moving off platform A to go to platform B.
As perhaps that's why platforms are here to stay.
So the software threat is the group that goes, hey, with the click of a button or a flick of a switch, I can move all your clients' accounts from that platform to mine.
Largely agree from a platform perspective that platforms have invariably been very sticky. I think the broader issue is whether existing or new entrants in the financial planning area change the way they want to do business, in which case they adopt a new platform or a new environment to manage new clients and slowly build up their business that way and run down their reliance on their existing platform. And I think we've seen that happen historically when there'd been major shifts in platform penetrations when a Colonial came in or BT came in historically. So I think that still can happen and will happen. It's just a matter of knowing whether the next one's going to be a NetWealth or a Hub24 or some entrant we haven't seen yet.
Complacency is your biggest issue here, that if you look at how long MYOB sat in that space, undisturbed, and basically grabbed market share all over the place, and suddenly within 4 years that has been disrupted dramatically by Xero, and the race is on absolutely now. So I think that if you sit back and think that what's happened in the last 5 years is going to be my future, the world is about to give you a rude shock. This cloud-based integration systems are not going away. They are going to be the way of the future. And just in that when we were at the XeroCon, for example, everybody that had a stand would come up to us and wide-eyed and bushy-tailed, unlike the advisors that are at say, the FPA or the IFA conferences, they come up to us and they want to know what you're doing and how they could integrate their systems into our systems. And so this community, this ecosystem is going to erupt very suddenly, and the challenge is going to be, you've got to be part of this. Because if you're not, the world's going to run past you, and you'll wonder what in hell's name just happened, just like I'm sure MYOB did. And now they're waking up to the fact, and I see they're announcing cloud-based solutions and integration, etc. So I think your biggest concern would be complacency.